Hey guys, I thought I'd put out an end of the market wrap video today since I didn't do one yesterday, and I want to just go through a few more charts. Big move today, and we've obviously got volatility expanding. So, when you get volatility expanding, you're going to have big moves to the downside and big moves to the upside. But bigger picture, I think we've started a correction. I think it's obvious to most now, and that's why you're seeing the selling getting more impulsive. So as the selling gets worse and worse, we'll start to look for a bottom in this, at least this near-term move. But I don't think it's yet. And I want to show you guys this, SOXX. This is a semiconductor index. Semiconductors, for anyone that's not familiar, they're kind of the leading edge of tech, typically. They, usually you want to watch the semis for where tech is going in the future. I want to point out SOXX, we've got this uptrend line. It really was started, this is going on the daily chart back to the March 2020 lows. And we really started to form a trend right in this area right here. Let me kind of zoom that in. The trend started showing up right about here in June of 2020. And all the reactions that we've had, there's actually another one right here. But we've hit this trend line and we held support 1, 2, 3. Zooming in 4, right in that range. 5, 6. All right, so there's 6. There's been 6 reactions that we've held that trend line, but we started to build negative divergence. That really started to build right back in here. So I've got it circled. This was a divergent high. This was a divergent high. This is what I talk about when it's about picking up nickels in front of a steamroller. It's the fact that if you continue to buy the market when you have negative divergence, yes, it can continue to go up, and oftentimes it does continue to build for a while, but the gains are usually going to be limited, and you're just the risk reward to take a long trade when you have negative divergence is just less favorable. It's not guaranteed to not be a great trade, but it's less favorable. Most people just continue to buy the dips till they get cleaned out, basically. So basically this divergent high here, then we fell. So the thing, let's say you bought at support here, you still had, there was obviously still some gains there, but you don't know that there's not going to be gains. So that went up another 20%. That's relatively small for this index. This thing can fall, 80% when it comes down, and it held the support line here, Doesn't mean, when you have negative divergence, that's not a reason to just sell your long position. And it's not a reason to short, but typically I wouldn't want to be adding to a trade, buying the dips essentially when you have that negative divergence. So you'll see there, you see how we're just building that negative momentum right there on the RSI and the PPO. So then what we're looking for a trend reversal is a break at trend line support. And obviously there's your break right there today. That's a sell signal in the SOXX. See the volume? See that big volume spike right there? So we've got a break of trendline support. We have a volume spike. This now flips this chart to a sell the rip. And I think that's obvious what triple Qs is and the large cap tech. It's sell the rip. If you bought the dip last week, you're paying for it today. And this one's just now on a sell signal. So any kind of bounce back into trendline resistance, whether that happens tomorrow or next few days, bounce like that, that's objective to short. You could even take the short here today and just give it a little room. Oftentimes when the sell signal shows up in the very beginning, they'll do a little counter trend bounce trying to wash you out. But as long as it remains below resistance, it can, keeps getting rejected, it's sell the rip. So where's this one heading? Well, I see a support zone down here in this 389.85 down to about 383.60. Looks like that's where we, had several reactions, and that was resistance right back in here, and kind of support here, 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 and here. 4 tags, basically 5 reactions. So I like that zone as a target for this. That would mean a drop from where we're at now of about 13 to 15%. And that would probably line up with a drop in the triple Qs of maybe 10 to 12%. This usually falls more than the triple Qs, but this one's just getting started. Unless they recover this tomorrow and this was just a brief break, which is very unlikely. It is possible, but not probable. Then I think we're on a sell signal, and we're heading lower, starting a downtrend. Again, that negative divergence indicates that we should be heading lower. So I want to point that out. That's a key trade right there. So some top components of the semiconductor ETF, got NVIDIA. This one's been a monster this year. It has just been, nothing but bullish. Now today you can see we're closing below the 50-day moving average. I don't see anything extremely bearish, at least. There is negative divergence. It's right there. See it? And you've got it there on the RSI as well. So clear negative divergence. The trend, though, the trend that I like at least is marked it in blue right here. And you can see this. Here's your COVID drop right there. And you can see we basically support right there. So I don't know. Maybe this wants to pull back and hit the trend line, but I'm not really interested in shorting this one unless I had a better trend line to watch. Can't really mark that as a trend line because we only have a couple reactions on that one. So I'll probably just leave that one alone, but I could see it coming down to that trend line support right there, and then we'll see. If that breaks, if we have a different picture going on. Here's Broadcom. You can see Broadcom. This was really the trend line after COVID. This was a liquidation event, so you just kind of throw that out and then just build a trend line after you get a semblance of kind of a normal trend. So I've got support, and we held support right in here. We finally broke, and it's just been drifting sideways, just guided by the moving averages for the last few, for a while basically, since all summer pretty much. Nothing technically damaged yet. I mean, obviously you've broken the trend. You've got negative divergence showing up on the RSI and the PPO. So everything remains, it's technically a bearish thing. We need to see probably some of these moving averages get taken out, and we probably have some sort of a, it's just been pretty choppy. So nothing crazy, but I just want to kind of point it out. The point is it did break its major trend right here, so I can easily see us roll down and probably taking out these lows on the next leg lower. Not going to happen all at once, but I would look for a move at least at a minimum down to 419.50. We'll likely get a reaction there, and then possibly head lower from there. So things to watch on that. And here's Qualcomm. Again, Qualcomm, clear uptrend line from the March 2020 lows. We traded this one back here, so that was my sell signal. Let me zoom in. Here's my original sell signal marked right up there. Go back and watch the video. I talk about it February 3rd. And we took profit on the initial drop right here, and that's just been going sideways. We're right, looks like we're right at some support right here. Yep, we're just back at that support. So look for that to break. It is support until it's broken, so we need to see that go. But with the index, starting to break trend, I suspect these indices and these individual semiconductors are going to start to make their next leg lower. So look for breaks of support to initiate another sell signal. And here's the one that I am short, AMD. So AMD also broke support. Let me roll it. This one's got a longer trend line coming off the 2016. This is the 2016 low area, and just a clean uptrend line for many years, going on 5 years of an uptrend line. So it's been a monster, but it broke trend. We had negative divergence starting to build. Let me get that marked out. You can see just the confirmed negative divergence right there. See how we made a new higher high in price right up here, spiking up, but lower high in momentum right there. See how it's lower? So that's your negative divergence. Again, if you're not familiar with these concepts, take my course. Link in the description below. It's not free, but it's not that expensive either. And it'll teach you all these concepts, which will really help you find trades and evaluate trades as you're going, rather than just, use your greed and fear to control your positions. So there is the negative divergence, and there's the break of trend. And then it basically backed us to once, twice, and then overshot it with a brief fake out. So that's likely the top right there. I can't guarantee it, but I would say that's likely the top. And you can see we even back tested it again right there. There was another test, failed. So every time it's tagged this trend line, it's failed except for this one overshoot that impulsively failed quickly after. So that was a bull trap. So on the downside, we've got this lower trend line right here marked in blue, just a couple reactions along the way, but I'm looking for that to break. So I suspect we gap down tomorrow and we break it, and that should set this in motion to the downside. Looking for this to come down to this level down here, 73.80 area. You can see we have lots of tags. That's good support for sure down there. You can see there's support, there's support, there's another one, there's another one. So 5 or 6 tags of that. Looks like what, 5? And so, I would expect we come down there pretty swiftly, and we will probably get a little bounce there. I don't think it's going to be a big bounce, but I think we will get something. Maybe it bounces 5 to maybe 10% or so. Let's see how much farther down this is. Yeah, it's down 30% just down to there. So I think we get a bounce there for sure. And then possible, I don't know how probable, but I think there is a chance that if we break this 73.80, we're going to fall straight down to 58.80. And that would be my final target for this one. I had it back here. I've been kind of watching that level as a key level. That's a real thin zone for this one. That means that look at all the trades, all the daily candles that participated in this purple range that I have marked out. So there's lots of people, lots of longs basically, that are positioned in this range. But once you break that level, all these longs are losing money. They're all negative. So it just increases the probability that you're going to have a lot more people that want to sell as they start to lose money, which means you're going to fall right down. That's what they call this thin zone. There was no trading that took place right in here. So I think you just roll right down through that thin zone down to 58.90 or in the area. And that's likely going to be the bottom for what move might show up in this stock. But again, if that happens, that's a drop of about 41 to 42%. So a really good trade if that works out. I like it. I'm short AMD, continuing to ride this one down to the downside. Okay, let's move on to a new sector, XHB, which is the home builders. All right, so we're going to start out here with the daily chart. Again, this trend really comes off of the kind of early, post-COVID crash right here back in, July of 2020. And you can see we hit support there, hit support through here, just validating the trend line with lots of reactions. That's key. All right, you want to have a lot of reactions to help validate a trend line. And you can see basically as I zoom in, we basically just broke it right there. There's a sell signal today. Nice solid impulsive breakdown. That's what you want to see. See, we broke it before, but it wasn't that impulsive. It was just kind of right there at that trend line. And then we just kind of, we're grinding around along that support line. But today it's a big impulsive breakdown. Nice confirmation. This also came with negative divergence, as always, typically, when you're looking for something to sell down. So there it is. That was, let's double check this. Yeah, pretty much negative divergence. They made an equal high. So your former high was basically right here. There's your former close. And you can see we didn't quite get there. The seller stepped in a little early, but pretty close. But that was on a much lower momentum than before. So clear negative divergence there. And if you want to zoom into kind of a tighter time frame, we have a definite negative divergence on the tighter time frame, which would be right here. Let me just mark that out. You have right there, there's your negative divergence right in there on the PPO, and here it is on the RSI right there. So you have momentum trending down, and yet price, you'll see you made a high here. Here's your high of momentum, and then you made a higher high in price and a lower high in momentum. All right, so that's your negative divergence, and there's your sell signal. So that's what we got on that one. Okay, so some support to look for. Well, we have two reactions right here. So we have some support right in there and that's sitting at about 69.30. So I think that's where we're heading, probably just right off the bat. We might get there tomorrow or sometime this week, but that would be your first level of support, likely going to get a bounce there. And next level to watch right there at 65, 64. And let's see what else we got. Yeah, for now, I'm just going to say those two. We're looking at a drop, a potential drop. The first level of support, that's down to about 5% or so, and then the next level is about 11%. Your top holdings in this one, Williams-Sonoma. So you'll see here on Williams-Sonoma, we have a clear negative divergence right there. See that? How it's just downtrending, dropping off. And we made a new divergent high just recently. They popped it up there and it failed and sold off. Divergent highs have a higher probability of failing, so you want to look for those. And then I've got this trend line marked in green right here that we're just kind of walking up. So you can see held support through here and there. Lots of reactions, all right? And this hasn't broke yet. We haven't broke support. So I'd be looking more for this to sell down to the trend line support and then break before initiating a short. That's what I'd be looking for. So this can be on watch for now. We'll look for a break of trend line support. And XLI, we got industrials here. Here's your March 2020 lows. Clear up trend line right there on the March, coming off those lows. We built negative divergence back here. Right, I had that marked out and kind of marked out those divergent highs. And I was looking for a break of that trend line support, and there it is. Started to break. Wasn't that impulsive, really? Your sell signal really came right here. But probably the most impulsive break we had for a while. And then it was just straight down. So clearly we broke the trend, and then we've just been trading sideways. Now I do have some support that's right here at about 101.48. Let me get rid of this. And we dipped below it twice. So two bear traps, dip below it, recovered, dip below it, recovered. What do we got going on now? It looks a little different because you'll see we dip below it, actually dip further. They tried to recover, but at resistance, it got rejected and follow through today. So that's helping to confirm that resistance is now going to hold and we're going to actually head lower. So what I'd be looking for as next level of support, looks like we got a minor support right there at 97.28. Kind of extend that out. I think we're likely going to break that. And then we've got 93.86 as the next level. Possible level right down here too. You can see we had kind of a gap up right in there. I think that's likely going to be our final target of support. And that would be about 85.16. So we'll watch for that. That's going to be, if we're going to head down there, that's a move of about 15%. Okay, so then those industrials should start to play out, like JCI. That one was really working today. You'll see here, here's your March 2020 lows, clear uptrend line there, bearish rising wedge with negative divergence. It's kind of the same story pretty much across the board. And we broke. So there's your initial sell signal, but then they just rallied it kind of, like an algorithm was basically rallying it. It just was grinding higher for months. So it created a secondary support line right here. We broke it. There's your break of the secondary support. And once you broke that, it's just been sell the rip ever since. So it broke and then it just gapped down, rallied up, sold into, and you can see. So we're just flagging down like that. So yeah, I'm looking for lower prices. This one, I would say, yeah, I've got some support right there at 62.32, and the 200-day moving average is coming in down there. So I'd say that's a good target for at least a short-term move. Probably move straight down to there and then bounce, get some sort of a bounce. Obviously, we could go lower, but that's levels to watch. Okay, that's all I have for this second video. Just kind of wanted to touch base on the, well, we can look at the Qs real quick because obviously closed pretty bearish. You can see they were trying to hold that support zone. If I go to the 1 minute, but you'll see, we can look at the 5 minute here. They were trying to hold that support zone all day right in here, just kind of dipping below it, recovering, dipping below it, recovering. Ended the day down below it, breaking that support zone. Nothing crazy. We'll see if there's follow through tomorrow. But I think there's likely going to be, and you can see where we closed. We just closed below all those support zones right there. So we'll see. I am looking for a move down to 354.50 before we likely get some sort of a bounce. And then maybe final target on this one's about this 342.50 area right in there. Or lower, but again, we'll just have to see how the market plays out. But I am looking for lower prices across the board in most of these indices. higher prices in gold. So thanks, guys. Catch you on the next one.